last section of this today's show here would be dedicated to the US dollar Japanese yen. Again, if you like this review and you want to tweet it, feel free to do that. Now, the US dollar Japanese yen has been extremely strong, piggybacking on strength in the dollar index as well. There are some people who believe that the dollar index has started a new leg higher, and very strong leg higher, as you can see here. And this market is now at a 50% resistance level, and that's the reason why this market has stopped right there for the moment. Now, when we study the long-term market here, you will remember that we were able to identify this 170 area where the market has bounced a number of times well before it happened. In fact, we were able to identify this in May last year, believe it or not. It's simply a 50% retrace. Once the market has right at this point confirmed the end of the longs, there are some people believing that this market could get to 131 in the community. I mentioned that the world sequence of measure move higher was completed, and so this market had only one direction to go. In fact, for those of you who were following us here on FS Street during the Tokyo Open Room show, we captured this 121 here. We brought it first target, but the market continued lower. And if you subscribe to the FX Street Premium videos, you will also learn that I've made the calls here and here, and these were no more than just extension shorts, as you can see here. The first target, and then again another trade here to second target to the pip. So the importance of the effects of algorithms, these classes of algorithms in price is very, very clear here. Now, where are we at the moment in this market? We had participation from weeklies who are willing to bring this price, believe it or not, to 137.71. And that's only the first target of this measure move that started in this market back in mid-July here, if you wish, beginning of July, mid-July. There were a number of tests between June, end of June, and beginning of October here. And if we actually discount or remove this, the tail that we had here the day of the US electoral vote, we have a very clear pattern here, and we had this market very, very strongly moving into that area, and we hit the first and second target. So this market is very strong. It's not going to immediately to retrace right away, or it's not going to retrace a lot right away. However, we could see some weakness next week. Now, that said, when this market starts moving, it can move for weeks and months without briefing, actually. And we have a proof when we go back even just a couple of years back here. You can see that this market can start moving, and when it moves, it really moves. But nothing lasts forever, and this market is also very, very technical. So when it will correct, it will correct to very technical levels. And if you follow my analysis, I've been actually calling longs here and the correct sequence of measure moves for years, basically. In August the 1st, you'll find an article on F Street where I mentioned the two targets that eventually this market traded. And there was August 2015, and there was a 15% retrace here, and that market actually moved then eventually into the first and second target and continued higher. So what can happen next here is we need to look at the weekly time frame, and I'm going to look at potential retracement from two levels. So one level is going to be this one. So if we get a retracement to 109, 110, 110 here next week, I'm going to consider this as a new long for this market, which is going to challenge the position that an area where weekly shorts could come in here. And that's starting exactly at current price, 112.35, 112.45. We are around that area where weekly could actually participate. If we get a reaction lower here, no, I wouldn't be worried because any reaction lower is going to be very probably an opportunity to keep buying this market. Okay, so 109, 110 next week is going to be an opportunity to buy this market. Now, also remember that after today, tomorrow and Friday, it's likely going to be very slow days because of the Thanksgiving holiday and Black Friday. So I don't expect a lot from this market as well.